So I think it's important to understand what actually is happening right now. So there's been a lot of chatter about Libor in the industry, and really the reason for that is because the regulator of Libor, the FCA, came out last year and said that they would no longer compel panel banks to submit to the production of Libor. It does not necessarily mean that Libor will cease to exist. It just means that right now the fate and future of Libor is uncertain, and the date that we are working with right now is December 31st, 2021. So I think it's important to start preparing for that uncertainty. Be aware of the wide spectrum of outcomes. Take an inventory of your exposure to Libor. Think about the different areas that can be impacted. Start educating your staff that something may occur, and keep monitoring developments to see what may take place. Also, you can tap into resources like the Federal Reserve has started the Alternative Reference Rate Committee and has a lot of information on their website. And trade associations like AFP also have information that you can tap into. We haven't dove necessarily into SOFR just yet. SOFR began being published, I believe, in April of this year by the Federal Reserve. We're monitoring how that behaves, and we're really looking forward to seeing how SOFR behaves against other benchmark rates. SOFR differs from Libor in a few ways. One, SOFR is based on a risk-free rate, while Libor is naturally and inherently created with a little bit of credit risk. Also, SOFR is a look-back rate, while Libor is a forward-looking rate. And in addition, today, SOFR is only an overnight rate, while Libor has a number of term structures. I would advise fellow practitioners to be aware of what's going on, continue to monitor the developments. I'd also caution them to avoid the rabbit holes. Because of the uncertainty, it's very easy to trickle yourself down that rabbit hole. So don't overreact, but don't ignore this.